we explore the intriguing realm of cryptocurrency market trends in today's video, a subject that has drawn interest from both investors and fans. The state of the cryptocurrency market right now is noteworthy because it illustrates both the possibility of huge profits as well as the volatility and unpredictability that come with digital assets. Given the encouraging indicators that Bitcoin and XRP are displaying, many people are interested in learning what the next few months may bring for both cryptocurrencies. Often considered the gold standard of digital currencies, Bitcoin has proven to be resilient and flexible, which has made it a popular target for speculators hoping to profit from market swings. In the meanwhile, XRP offers exciting prospects for expansion and innovation because to its distinct position in the financial industry, it is essential that viewers remain up to date on the most recent advancements and market characteristics as we traverse these trends. In the rapidly evolving world of cryptocurrencies, information is power, and understanding changes in market sentiment can have a big impact on investment tactics. In addition to improving your comprehension of the market, interacting with this knowledge puts you in a position to make wise choices. Together, let's examine the state of cryptocurrencies today and discover what opportunities Bitcoin, XRP, and the market as a whole may have. Examining some of the most important statistics that characterize the Bitcoin market's current situation is crucial. Right present, the prices of Bitcoin, Ethereum, and XRP are roughly $30,000, $2,000, and 50 cents, respectively. These prices are a reflection of the market's continuous volatility, which is impacted by a number of variables such as investor sentiment and regulatory changes. Although it has recovered significantly from earlier lows, the total market value of cryptocurrencies is still below its all-time highs at about $1.20 trillion. A mixed picture is indicated by recent performance trends, with XRP experiencing volatility as a result of legal issues and Bitcoin and Ethereum displaying signs of stability. The occurrence of tax sell-offs, which frequently take place as year-end draws near, is one important factor influencing market dynamics. Temporary price drops may result from investors selling off their holdings to offset capital gains. The sentiment of the market as a whole and the values of different cryptocurrencies may fluctuate as a result of this behavior. Anyone working in the cryptocurrency field needs to understand these dynamics since they have the potential to affect market forecasts and investment plans. Investors can more effectively negotiate the intricacies of the cryptocurrency market and make wise judgments going forward by monitoring these figures and patterns. Critical insights on Bitcoin's future trajectory can be gained by examining its recent performance, especially with regard to the significance of the $76,500 mark. Bitcoin has struggled to sustain its upward momentum at this price point, which has become a critical resistance level. A significant bullish trend could be indicated by breaking past this barrier, possibly opening the door for Bitcoin to hit the highly sought-after $100,000 milestone. According to numerous analysts, if Bitcoin can maintain its momentum over $76,500, we can see faster price changes in the direction of this psychological milestone, propelled by heightened demand and optimistic market attitude. Furthermore, it is impossible to exaggerate the significance of institutional Bitcoin investments. As more institutional participants join the market, their presence gives Bitcoin legitimacy and stability, drawing in ordinary investors and boosting demand even more. Institutions frequently contribute large sums of money, which can boost liquidity and cause prices to rise. Additionally, their long-term investing strategies generally show optimism about Bitcoin's future, indicating that the cryptocurrency is growing in popularity as an asset class. In addition to bolstering Bitcoin's credibility, this increasing institutional interest also raises the possibility of significant price increases. The way these elements interact will be critical in determining how Bitcoin performs in the future. Therefore, it is critical for investors to keep up to date and take into account the larger market dynamics at work. When XRP's present position is examined, it becomes clear that the cryptocurrency is negotiating a challenging environment with significant price fluctuations and important resistance levels. With volatility that reflects both market mood and continuing legal issues, XRP is now trading at about 50 cents. The 60-cent barrier, which has been difficult for XRP to overcome in recent weeks, is a crucial resistance level to keep an eye on. But the $3 threshold that will soon be reached is really important. A significant breakout might be indicated by breaking through this level, which might draw in a swarm of new investors and raise prices. Given the recent favorable news regarding its legal challenges, analysts are hopeful about XRP's future, which may boost investor confidence. Looking ahead, the next 60 days have a great deal of promise for notable increases, with some projections indicating targets that would surpass prior all-time highs. XRP might see substantial price growth if it can sustain its upward trend and successfully break through the $3 resistance. The wider acceptance of blockchain technology and growing interest from institutional investors further enhance this development potential. Traders and investors alike continue to be interested in XRP's breakout potential as it develops, so it's critical to keep a careful eye on these events in order to make well-informed decisions in the ever-changing cryptocurrency market. Examining the sentiment of the market and institutional interest in cryptocurrencies today reveals a landscape influenced by a number of outside variables, such as geopolitical tensions. Uncertainty brought about by recent world events has caused market conditions to fluctuate as investors respond to news and developments. Increased volatility may result from investors gravitating into safe haven assets like cryptocurrency as a result of these tensions. As a result, traders are keeping a careful eye on any news that can affect prices, and mood around digital assets has become more cautious. The importance of institutional actors in the cryptocurrency market has grown in this context. In addition to making substantial financial investments in cryptocurrencies, institutions are also giving the market credibility and stability. Their participation can lessen some of the volatility related to retail trading and frequently results in enhanced liquidity. Additionally, institutional interest typically draws in more retail investors, which can raise prices through a positive feedback loop. The significance of keeping an eye on whale activity, large cryptocurrency holders who have the power to dramatically affect market dynamics, is another crucial factor to take into account. Investors must monitor their trading patterns because whale movements might indicate changes in sentiment and possible price developments. Market players may more effectively negotiate the intricacies of the Bitcoin landscape and make wise choices in a setting that is changing quickly by being aware of these factors. For investors hoping to profit from possible profits, spotting emerging patterns and opportunities in the cryptocurrency market is essential. There is increasing expectation of altcoin waves as May and June get near, as these periods have traditionally seen notable price fluctuations. Many observers think that altcoins might see a resurgence in popularity once Bitcoin stabilizes, which would result in a significant price increase. For investors who are willing to diversify their holdings beyond Bitcoin and Ethereum, this trend may offer profitable chances. However, given how infamously volatile the cryptocurrency landscape is, it is imperative to be ready for market moves. Investors should keep up with technology improvements, market trends, and regulatory changes that may affect the performance of altcoins. You may minimize risks and put yourself in a position to seize new chances by being proactive. Additionally, now is a great opportunity to urge people to thoroughly